Right. Okay, great. So that is the Aussie. Sterling yen. Sterling yen, sterling yen, sterling yen. Right, I've got it as a first red day. So for those that don't know what a first red day is, a first red day is where we've had at least a couple of days of pumping up, right? And basically it's the end of a cycle, end of a bullish cycle. So 1 day of pumping up, 2 days of pumping up, third day of pumping up, right? Up, up, and up, breaking down, right? So this is the first red day of that series of bull days. Okay, so we're looking for the continuation to the downside, right? Now, this has come down pretty heavily. It's held at support. It's pumped up a pop, and then it's come down and breaking out that support. Now, the question is whether or not this move is done or if it's going to continue. We don't know. But what we do know is that bears are in the market, right? And they've been in since the start. Well, since Tuesday, right? So they've been coming in, and they're still in. Bears are engaged, right? The trend is your friend. We're on the front side of the move. Okay. So while we're front side of that move, we can be looking for shorts. So what I'm in anticipation of potentially is a correction. Now you can be part of that correction if you're brave, because you're going against the trend, you're counter trending, or you can be patient, let it come up to the low of yesterday, that breakout level, see how it behaves. Maybe that will act as resistance, and if it does, decelerate in line with the trend and continue. Maybe it will break that, and then the next level will be where? Where do you think it will be? Anyone care to see in the chat where it could find resistance at? On a break of yesterday's lows, where is the next resistance? Anyone hazard a guess? 3, 2, 1. The closing price. Closing price of Tuesday could be an anchor point for that price to come up to and then perhaps drift away. That's not to say sell as soon as it gets there, but what we're looking to do is we're looking to fulfill the ATR of the day, which is around 142 points. So far, it's already done half of that. It's done about 70, it's done 80 points so far on the day. Okay, so perhaps there's more juice in this, pumping up to come down to last week's lows as a target. All right, so that was sterling yen. And euro dollar, very similar scenario. First red day. Okay, so we've pumped up, we've dropped. That could be the end of that bullish cycle. It's a pretty strong drop, right? That's not to say that this can't come up and start squeezing all that drop, but we're just playing with the thesis that it won't. It's a first red day that gives us a bit of conviction that we're on the downside. Now, it could just tail off from here, all right, and we've missed the boat. What we're looking for is to trade from levels. We want this to pump up to our level, okay? Now, yesterday's low was here, right? Perhaps that's going to be the resistance level, but it hasn't gone there yet. All right, so this is what I'm talking about, the Fugazi. This here would be tempting people to sell, would it not? Right? Oh, that must be the end of the correction. Oh, it's coming down. Wicks. That means must mean it's going to blow off. Fear of missing out. People start selling, and guess what? That turns into a bullish candle, and it keeps coming up. So we are going to use the levels. We're using the low of yesterday and the closing price as our resistance. Okay, that's the closing price somewhere over here. That red line. In fact, look at this. This is Friday's closing price. Where is Friday's closing price? Bear with me. This is Friday. Where did it close? Okay, that's Friday's closing price, pretty much. All right, we've got today. I was going to say today. Yesterday's closing price, which is that red line, but I'll put a dotted line there. So I'm going to use these blue lines, sort of celeste, light blue lines as my closing prices. So the dotted line is the Friday's close. This is Friday's anchor point close, right? So all of that combined with yesterday's low could be regarded as a resistance area. So if we start tapping into here, I'm going to be looking at the price action, seeing how it behaves for a continuation to the downside with a stop in nice and tight and picking up really nice risk to reward in trying to target the ATR, the average range of the any given day over the last 20 days. And just noting that this green line here is support. This is Wednesday's closing price, the middle of that week. The middle of last week, I could use its closing price as a target. It pretty much tallies up with the ATR, right? So I'm not here to try and squeeze every single pip out of any range that I can. I just want to get a bulk of it, right? And I might refine that later on depending on the price action. Might not even pay off, may not even work out. It could just implode without me, so be it. But I'm trying to offer a rules-based mechanical strategy for you guys and for us, for me as well. So rule-based and playing the you win some, you lose some scenario, and some of you just can't get involved with because it didn't meet your rules, and that's fine. But one or two of these a week, or one a day, or whatever it might be, I mean, you're looking at really good opportunities and outcomes. So that is the euro. Any others that you want me to look at? I encourage you to go back and look at the link that I sent in the chat room. It's essentially what we're going over here. If not, we'll give it a wrap and we'll start looking at the charts and seeing what opportunities we might have that are unfolding before us. Aussie, I just did the Aussie, but you wanted me to do it because you didn't have the screen, did you? Okay. Where are we? Yeah, I was talking about 3-day breakouts. So prospects here of a continuation. So this Aussie broke up once, twice, 3 times. So we're in the 3rd day of breakout traders, breaking out Friday's inside day high. So 1, 2, 3. So bulls are in control. But what happens on day 3 of 3 days of breakout? You get the squeeze, right? So we've got the squeeze. So if we were up high now, I'd be looking for that squeeze that happened without us. It happened in Asia and London. It happened without us, so be it. But there could be prospects of getting on board of this if it continues in the pump, looking for it to come up in towards the closing price, right? And then watching the behavior of price around the closing price. And if bears are taking control again, then we could have a trade on for a continuation to the downside, right? But again, what is the ATR? The average true range is about 60 pips, right? And I think we've already seen, we've seen 70 pips already on the day, right? So that would start putting me off looking for the continuation. Not to say that it can't, it could do, but you might want to go in with really small size, because if that's going to give you all the indication that it's going down as a trap and then pumps up, you'll be stopped out or you'll be at break even. Worst case scenario, stopped out, or you would have recognized that this is not coming down. So based on the ATR, it's not a best trade opportunity for me. It's not really on my radar, but for the sake of giving you analysis, I've done all this and there it is. Okay, any questions there? If you've got any, ask me in the room. I'm popping over there now. I'm going to have a quick scan and see what's setting up. You're very welcome. Thank you all for being here, and I wish you all the best for the day ahead. Good luck out there, guys. Speak to you soon.